Everybody's waiting for Bitcoin bounce, altcoins bounce. Are we going to find a bottom in the crypto market? When is the crypto market going to pump again? We're going to be looking at some charts that are showing signs that we might be nearing that eventuality of the markets actually pushing to the upside. But as we get prepared to get live right now, everybody, we are live on YouTube. We are live on Twitter. Head over to the Twitter page at Kelly Kellam or at Academy BitLab and hit that repost, hit that like button. If you're watching on YouTube, hit the like button, hit that subscribe button. Make sure you have your notifications turned on. Have a lot more member streams coming out, not only this week, but essentially just moving forward. So let's get into it. We got to talk about these markets. We got to figure out what's going on so that we can stay on the right side of the trend. Let's get into it. Let's go. Bitcoin, crypto, altcoins, when are they going to pump? I know it's feeling like a never-ending waiting game right now, but we're going to dive right on into it. We're going to look exactly at the signals and the levels that we want to pay attention to, because when we look at the total crypto market cap minus USDT, minus USDC, we see the price action coming down with these lower lows here, kind of testing into this range body right here. We kind of fell through this sort of support range that we were really kind of hoping, but the price action did kind of suck back up into it. If we zoom out on this and look at the indicators as well, I want you to notice here, we have a very much higher high here on this momentum range. We also have a little bit of a higher high. Let me zoom out on this a little bit so you can see a little bit of a higher high on the RSI right here as well. The purple line here low, purple line here low, higher. And what are we seeing? Not only the RSI, not only the momentum, but we're also looking at this in correlation with the price action actually having dropped further, while the underlying data is suggesting there's some strength starting to cook into this. Are we setting up for ultimately that bounce that we are looking for? There's a lot of things at play right now, and it seems like the news cycle is only getting more bullish for everything happening, especially in Bitcoin, but also in the altcoin market. So why are things still falling? I think there's still some things to be shaken out, but when we look at this on the daily chart, we are seeing some green. This morning, we had a little bit of a bounce, and that was actually what the thumbnail was about, bounce or fake out. It looks to me right now like it was a little bit of a fake out. But is this that double fake out where you get people committed long, reverse it, liquidate those people, get people committed short, clear that, flush that out, and then ultimately get that move to the upside? And we're going to be talking about that today, because when we look at things, we got the CPI data came in today, and the CPI data came in lower than expectation. This is a good thing, especially with what we're considering is coming here and what we want to see for these markets to truly push up. And that is liquidity. That is certainty in markets. We also saw breaking news right before we went live that the new Canadian Prime Minister is going to be meeting with Trump to discuss essentially ending this sort of trade tariff war that's going on right now, or at least bringing things more equitably in line. Because essentially, surprisingly, the US having all these tariffs on Canada right now, it seems like we're really slapping them down. But when you look at how many tariffs and how large the tariffs are and have been for Canada to the US, really what we've done is say, okay, you're going to do that, we're going to do that too. And it seems like we're doing something like completely out of pocket. No, not at all. And so I think what's happening here is Trump is really bringing people back to the table to negotiate, to bring things more equitable in line. Whether it's free trade or just equitable trade, I think is the agenda here. And so the questionability about where the pressures might come into market, what sort of inflations may arise from some of these tariffs passed on to goods as they're being sold in the various territories, is causing a little bit of that pressure on the markets. So when we're zooming out and we realize that we're also seeing the CPI data coming in, and I've talked about this, I don't want to say at length, but very regularly over the last 2 weeks, all the things that Trump is doing, I do believe is more in line with like a 4 or 5D chess game right now, that people go, but you came in, I thought the markets were going to pump. Well, they also need to tackle $36 trillion of inflation, figure out what's going on with, spending concerns and trade concerns and income concerns for the US. And in addition to that, we have $7 to $9 trillion in debt that we have to refinance in the next 7 to 9 months. So it kind of makes sense that we're kind of putting things in a position where markets are falling. Are we setting up right now the perfect opportunity for a massive bullish rebound? Why? We have the CPI data coming in showing that the inflation data is starting to come down. We're also seeing the markets pull back, and it's so bad. Trump is dropping the markets. I thought he was for the markets. Well, what if he's for the markets in the long term? And in the short term, we need to have some pain in the markets. We have $7 to $9 trillion in debt that needs to be refinanced in the next 6 months. And we can't do that at the current federal funds rate. We have the FOMC meeting come up. We have the markets dropping, CPI, the inflation data dropping. We are now setting up that perfect storm to get the liquidity, have more certainty to come back into the markets, and that's going to be incredibly good for risk assets. And this is all at the same time where we're seeing the global M2 money supply ticking up, breaking out to the upside. We are in the perfect storm for a dip buying opportunity right now. So my question to you is, what are you doing? Are you sitting on your hands? Are you buying? Or are you running away like a baby because you don't deserve to have profits? That's the questions we need to be asking right now, because now is the time to be buying, and maybe you're going to need to adjust your time horizon a little longer. But this is that sort of eventuality that people that want to make money in these markets, this is that setup that we're looking for. So let's get into it. Let's look at the data. Let's talk about it. We got Tex, Mex, Biomex in here. By the way, I'm going to actually do something at the end, Tex Mex. Randy kind of put me onto it. I shared it with Discover Crypto. We're going to be trying to talk to all the different content creators out there, doing little segments at the very end of the show, kind of highlighting other creators, making sure you're following people out there that are doing good, because why? Givers gain, baby. So shout out to everybody. I did share on my wall last night. I was in a spaces with the Givers Gain crew, the Billy Goat Tales, and that link is right here. Go ahead and listen to this. It's quite a few different people in there. Everybody from Randy, Miss Team Crypto, Jay Chains, Drew, me, Isaac, Cassius Cuvée, who else? Dave Digital, Alex O, Tradefly, the whole Billy Goat Tales crew, Crypto Billy, talking about habits and different ways that you can set yourself up for success, and different sort of habit tips and tricks and different things different people are doing to make sure they can set themselves up for wins, stacking wins, stacking positive momentum so that we can grow. So shout out to everybody. Make sure you go and listen to this, and make sure you're following Billy Goat Tales right here. Now, continuing on, we got some things to talk about, because yes, CPI data come down, but this is a big one right here. This is what we're watching. Global liquidity breaking out. Global liquidity breaking out. In the same moment that we're seeing inflation come down, in the same moment that we need to refinance $7 to $9 trillion in debt, we're getting the perfect storm. Yes, markets are pulling back, but this could be expected just on a price level, price structure basis. This pullback down into the zone, even lower down into the $75,000 loan, would be expected in a normal uptrend. We've seen this time and time again. And so the fact that this is pulling back, and we see other data setting up for strength, AKA liquidity, fuel for the car to continue driving up the hill. This is breaking out. We need the money printers to turn on around the world. Although we don't want it, it's bad, it's immoral for fiat. We have the best crypto, we have the best money capturing, inflation capturing mechanism out there, which is Bitcoin and some of these alts that we are all holding. So seeing that the markets are pulling back while the data is setting up for those Fed rate cuts, or even not a rate cut, which I don't think we're going to get in March, in a week or two, when we have the FOMC, the Federal Open Market Committee, where they determine the federal funds interest rate on debt. That's what the FOMC meeting is. That's one of the drivers of where's the certainty in this market. We're having a trade war right now, bringing different countries and different people to the table so we can negotiate things on a more equitable level. It's also putting pressure on the markets in the face of having CPI data coming in favor of being able to start having that discussion with the federal rate cuts. So we have the fuel already pumping up, only to start pumping up more and faster here very soon. We have the need for markets to come down because of the need to refinance all this debt that we have coming due to be refinanced here in the coming months. And we have inflation down, setting up the likelihood of that rate cut. The perfect storm is here. Markets dropping while bullish data is setting up for a more bullish trajectory in the coming months. I am stacking here. What are you doing? Now, continuing on from there, what else we got? Check this out from Caleb Franzen. Make sure you're giving him a follow as well. Friend of mine, friend of the channel, I found him when he had about 1,000 subs and started bringing him on to different media stuff that we're doing. He just he does such phenomenal work. Bitcoin's 120-day Williams %R oscillator is oversold. In the 2022 bear market, these oversold conditions lasted for months. Oh my God, guys, we might have to wait months at a time. Oh wait, this is talking about a bear market. So let's look at the data that's relevant to where we're at, because we are in a bull market. If you think we're still in a bull market, drop a 1 in chat. If you don't think we're in a bull market, go stand up, look yourself in the mirror, and tell yourself this. Self, I want to learn to look at data and not be such an emotional, reactive trader. Because if you don't understand that we are in a bull market, I don't know what data that you're looking at. We have not broken any structure that would suggest that we are not in a bull market. So here we go. In 2023, 2024, bull market. So this is where it's going to be relevant. These oversold conditions were short-lived and immediately started to recover. I view this as a buyable dip for me. So right here, boom, dip, launch, okay? Dip, we had to push up, a little bit more consolidation, but I mean, look at these. Each one of these set up for the larger move to the upside. And then look, large pullback, it's over, right? We haven't even broken the previous range high. This is the penultimate structure we're looking at. The price structure on a move up, regularity of price action coming back to revisit the scene of the crime. This was the crime. We broke out of that crime. Now we're coming back to where that breakout level was, about $74,000. And at this moment of pulling back, retesting that normal bull market behavior, the Williams %R has come all the way down here. I mean, almost as low. It hadn't even been this low until back here in 2022. The setup is here. If you stop allowing yourself to be triggered so emotionally and realize that the whales are stacking. Remember yesterday we covered that there are 65,000 Bitcoin purchased by long-term holders in accumulation addresses in the last 30 days. 65,000 Bitcoin. And you're worried here. Why? Now, continuing on, what else we got? We got some good stuff today, guys. Bitcoin and Ethereum open interest fell $1.37 billion, signaling a partial market reset. We need to clear out the over-exuberant that leverage, the derivatives. We need to have more spot buying that supports the price movement moving up. This is why when we come back over here to Bitcoin and we see these very quick movements, like for instance, fairly quick movement here, but we see like right here, very quick movement up. Market chops around, sure, but at some point, because that's so quick, you want to come down and flesh out this basically what's the inefficiencies in the market. None of this price level was supported to see where the bulls are coming in to defend. So what do? The price action comes back, sees where the bulls are coming in to defend. And I mean, it's testing right to this line already. Will we make it down to that next level down, which is essentially this line right here? Boom, which is not only the 382 of that move, it's also the previous range high right here. So even if the price fell a little bit more, all of this is perfectly in structure for what we're looking at. In fact, when we come back, I want to go to the Coinbase chart here, and we turn on the moving averages. What do we see? Let's go to the 3-day moving averages. I covered this yesterday, but I just want to reemphasize this. In a bull trend, this yellow line, which is the 100 moving average, 100 simple moving average, and this is a 3-day chart. So this is a 300-day. Look at this. Once we found support on it, boom, support. We zoom in a bit more. Look, support with the deviation comes back up. Support with the deviation launches, almost like a springboard. Double jump into a trampoline and then launch. What are we doing right now? We've just come back to revisit the scene that has been regular support this entire bullish trend. Now, in addition to that, what do we? I'll come back over to the TA in a second, and we're going to be looking at some altcoins as well. And this afternoon, I would advise for all of you to make sure that you are a member. By the way, everybody get active on this live poll right here. Let us know, again, are you bullish or bearish on this market, especially coming into the end of March? Do you think we're going to push up by the end of March? That's what this poll is about right here. And make sure you're hitting the like button right here. Make sure it says subscribed. Once it says subscribed, You can refresh the page and it should say join. Join right there. It's $1.25 a week. And we're doing member streams almost every afternoon here with a lot of the different altcoins and other data, some afternoon news, but mostly TA, charts levels, what you should be paying attention to so you can stay on the right side of the trend. It's a great way to help support, the BitLab family here and everything going on, because it's a lot going on over here. Now, continuing on, what else we got? We got Binance also received $2 billion investment for a 2% stake in crypto from the United Arab Emirates Fund. We already saw Abu Dhabi stacking into their sovereign wealth fund. Incredible. And by the way, we got 456 people watching here on YouTube, another 300 or 400 people watching on Twitter. Of you that are watching on YouTube, I can see the data right now. About 40% of you, and these are people that are here that have been here regularly, 40% of you are subscribed. Show some love. Get down here, hit that subscribe button. It's easiest way you can help support a channel. No super chats, no memberships, any of that. That's all wonderful and extra, and we love you for it. But just subscribing and hitting some engagement on there, it's a great way to keep this free content coming to you, because we've been keeping you guys on. We've been dropping some signals on this channel for the last 2 years that has been so spot on. Has there been some wrong calls? Sure. But I mean, we've been pretty damn dead on the calls about the projection about where things are going. And for those of you that are worried right now on the price action, just look at this. Increasingly, corporations, Bitcoin held by public corporations, 591,000 Bitcoin held by private corporations. Incredible. And it's only just beginning. It's such a small, it's almost like a fraction of a fraction about what's in terms of the number of corporations that are holding Bitcoin as opposed to the number of corporations that are out there. We are only just beginning. These corporate buying strategies, we're seeing it with Metaplanet, we see it with Strategy, MicroStrategy, but we've also seen it with a number of other corporations out there. But it's such a small fraction. When we start seeing Google, Microsoft, Amazon, Netflix, Meta, when one of those starts to tumble into Bitcoin, it's going to be a very fast domino effect, let alone states and countries. So continuing on, we also see, we just talked about countries, Bank of Russia is now starting to allow limited crypto purchases for their investors. The tide is turning the world over. The tide is turning. And do you want to be trying to catch the boat that was on the shore now? Or do you want to have to swim out to the boat when it's 4 miles out to sea, because it's the only way to stay afloat and to survive? That's what's happening in these financial markets. And you have the opportunity now, if you're bold, and it doesn't feel like you're bold if you just look at the data. That's what you need to realize. And then we see right here, altcoins, baby. Total market cap, retest of the all-time high from 2021 complete. The last 2 times RSI was at this level, total market cap rose 180% and 105%. A trend line was touched at the same time, which has been in place for 1.5 years. This is this trend line, boom, bounce, bounce. And this is the total market cap, crypto total market cap right here. Everything, Bitcoin, altcoins, Ethereum, everything. And look at what the RSI, this has been a double point of support in terms of this rising level of support on this diagonal rising support trend line, as well as the RSI, this horizontal level of support holding. Look at that. What does that say? Oops, let me scroll over here. Basically holding just below the 50 line. It comes down to fake you out that it's going to go bearish. Boom, up, boom, up, boom, up. So where we're at in the cycle right now and the buying pressures that are coming in, I would argue that anything that is bearish price action right now, anything that is bearish in price action right now with any dip is an overwhelming gift you're going to thank yourself for in the coming months, especially in the coming years. If you have a meaningful strategy that you understand that there's fear and there's reasons to fear. If you're buying into a fear narrative that's being created by price action versus looking at the data suggesting something might happen before it does, AKA a market cycle top. If you are selling in fear, when we have the bullish structure and outcomes outlined in the history of crypto right now? Every dip right now is a gift, and we should be taking advantage of it. So what are you doing? Are you buying right now, or are you selling? Or are you just sitting on your hands? Sitting on your hands is okay, so long as you're not capitulating out of emotional trading behavior in this market, because we are set up for the most asymmetric opportunity in history. Could we see further downside? Sure, but it is a gift if it comes. Now, coming back into this, we're going to look at some TA. We're going to look at some of the coins. I want to see you guys get active in the live chat. I'm doing a member stream this afternoon. Turn on your notifications. I'm going to tell you, I'm giving it away right now. If you have your subscriptions on and you click this little arrow and you click this all, turn on your notifications. I am going to make the member stream public for the first 3 minutes that it's up. So if your notifications are on, you'll see it. You'll have access to it. I'm giving you incentive right now to turn on your notifications. The meme constable says weekly MACD oscillator histogram is growing in amplitude. You trend that, what? You trend that and link it to, oh, there you go. You trend that and link it to price growth. 120K on the next major impulse seems very likely. Well, 120K is roughly about, if we zoom out, let's actually go to this chart right here. It's roughly, look at that. I've already had this on here for quite some time. The level that I'm looking at for the next leg up. Now, that doesn't mean from here it's going straight up there. The next leg up, once we break this previous all-time high at $109,000, we still have a lot of work to do. When this bounces here, we could even travel sideways for a few months. There's no telling with the big market players that are in play right now what's going to happen. We saw 7 months here with the price action going sideways before it broke out, 225 days of just ultimate frustration. But those paying attention were able to buy a dip, buy a better dip. Oh my God, a dip again? Where we're at in the market cycle. And what am I talking about where we're at in the market cycle? Where we're at in the market cycle gives us a good indication about what's to come. So in this case right here, this is how much time we've passed since the halving. Boom, boom. The high was here. Okay, boom, boom. This is the same amount of time. This is where the most parabolic phase came. Boom, boom. Look, we had a false top, came back down, and then the rest of the parabola that was still exponential growth came after that. Now, everybody's wondering nowadays, with everything going on with especially the halving right now has put it to where every block is 3.125 Bitcoin mined every 10 minutes. There's 3.1 Bitcoin created every 10 minutes because we ultimately want to reach the 21 million total Bitcoin, right? Currently, we have, I have it somewhere here. We have 19 million something Bitcoin. Every 10 minutes, 3.125 Bitcoin is created. In 4 years' time from last April, so yeah, 4 years' time from last April, when we had the last halving, then we'll have a halving of that mining block reward, which will be half of 3.125. It's 1.7 something like that, 1.6 something like that, 1.55. I don't know, but the reward, the new Bitcoin that's created every 10 minutes, created daily, inflation up till we ultimately hit the peak number of Bitcoin, the fixed total Bitcoin we'll ever have, 21 million. We do have inflation, but that amount is getting noticeably smaller each time. And in addition to that, we have big monetary players at play now with ETFs, with institutions, with different indexed crypto ETFs that are coming as well, with with countries, with states, with sovereign wealth funds, with pension funds. The buying pressures that are coming in now may drive this to where it's just steady stair step all the way up with 15 to 20% drawdowns as those large players get their buying orders, their buying strategies in place. We're going to have to see. It's a new asset, over the last 16 years. We're just now getting on the world stage where major players are getting involved. We've got to stay nimble because where we're at right now with support of governments and the soon to be battle for stacking from not only state level, nation state level, corporation level, we are in a race. We're in a race to get as much stacked before we get priced out as possible. That's what's happening right now in these markets. And I still think, again, even if we got a drawdown here, even something like this in this 2019 large run up and then huge sell off and then ultimately the move, we could get something like that. But ultimately, the bullish outlook for what's coming is overwhelmingly asymmetrically in favor of it's safer to be stacked than to not stack. That's where we're at right now. And we're seeing the signs that we very well could be in that moment where we're going to get that reversal. And if we don't, and this drops further, and we retest down into this $1.5 trillion level, I think that says somewhere in this zone right in here, that I'll just be adding to my positions. From this point down, I'm only adding to positions, waiting, whether it's a month, 6 months, or a year. I'm only adding to positions to ultimately look for larger profits down the line. Now, this is something we need to pay attention to. This is the fractal from 2020 where we had that big push up. This is that inefficiency I was talking about. Very big candle, price chops, and then it comes down and flushes out this candle, and it came down, filled the CME futures gap, and then launched. So similarly, we got that big move up, chop. We didn't get this just straight fall down. We kind of edged our way down. We have filled the CME futures gap, but if this were to hold, does it mean it's just up from here? Well, no, because that's not what we see here. We see a bounce here, basically bullish impulse up, almost a bull trap, but not quite, because it pushes up, comes back, higher low, chops sideways, and then ultimately works its way up. So let's measure that out and just give ourselves an indication of what that might mean on this cycle if that were to play out similarly. Let's turn off some of these lines and just identify this is that zone right here. This, I've already marked it out. This is the zone right here. So let's actually measure this from this candle. We're on the 3-day. Let's go to the daily. God dang it. There we go. All right. So we are going to do it from this day right here. Boom. That is 46 days. So right here, let's see, this is option J. So this would take 47 days before 47 days of a drop from this point over, sideways price action that worked its way up before it actually took out that high. So what would that look like in today's price action for where we're at? I've already measured it. We're down right now 30%. Okay, great. That's normal for every bull run we've ever been in. Between 15 and 45% drops is not out of the question. In fact, right back in here, we had a 50% drop in price action before the price ultimately resolved back to the upside. And we finally had that range high. Now, this was a weird kind of misnomer. That's the Chinese mining ban really shook the markets out, and it was too early in the cycle. Nobody's willing to really sell. Long-term holders, we just see this push back up. But when we see where we're at now, we got a 30% drop, which is normal. Kelly, what do you mean it's normal? Well, look. 37% drop. 34% drop. 35% drop. 40% drop. 39% drop. And this just goes on and on, rinse and repeat, shaking people out on the way up from $200 all the way to $20,000. We're over here saying it's over because we're doing something we've done in every single cycle ever, and we have not even yet retested this previous range high. Why? There's nothing, in my opinion, at this level. I'm not saying we can't break down and go into a bear market. Sure we can. I think the probability of that right now is about maybe 15%. So if we were to do the same thing where we have the large move up, sideways price action, come back, refill the CME futures gap, which we just did. If we go 47 days sideways from here, this would put us at basically the end of April. And that doesn't mean the price can't go up between now and then. This means it might take, on the basis of what we just saw from back in 2020, that this might take, and it would be normal for this to take that period of time. In fact, let's come over here. We can actually take a price action snippet here. I always forget which is it. Yeah, here. That's not what I want to do. Cancel. Yes. What I'm trying to do is, I always forget where the freaking button is because I don't ever do it. Let's see. It's over here. Give me 1 second. Give me 1 second. It's a pattern. It bothers me when I can't find something. It really, really does. Which, do you guys remember where it is? Let me know. Let me know there in the live chat if you remember where it is. Ba, 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 ba. This is where you see, here we go, bars pattern. There we go. Here we go. Let's see what this looks like. Sometimes your brain just doesn't work, you know? All right, let's get this over here. Here we go. And this, I mean, look at how beautiful that is. If that were to play out, I'm going to tell you why this is beautiful. This, of course, is a fractal, but this is beautiful because this would suggest, if this were to play out, that this would essentially have price action bouncing up to test where the previous range lows. Now, this isn't going to play out exactly like this, but when we look at the time basis in the chart formation, a bounce up to this would be normal. Price action coming up here. People will buy here and then get mad that it drops and they'll sell here. That's not what you want to do. You want, for me, I would be waiting, either buy here and be okay with whatever happens, or as this pushes up, wait for a rejection at these range lows and wait for the price action to come down and start showing signs of reversal, and where you have a higher low, substantiating that you have a higher probability that this reversal is coming in. So you're missing basically from 78. Oh, you only buy at 83 instead of 78. And you get a little bit more hedged into a certainty basis here. This would be a great buy. And then look, comes back up, rejects again, finds some more support. We're building a bit of a base here with higher lows, higher low, higher low. And then boom, pops through, comes down, finds support on this level, and then ultimately starts moving up. Now let's go back one more time. Now that I know where that level is, where are we at? So we're going to go right here. We're going to take the bars. And actually, let me put a little, I'm going to put it right there so we can see it. There we go. Okay. Now we're going to come right here. Nope. I'm going to come right here. We're going to measure this right here. We're not even going to go to the all-time high. We're just going to take that right there. Okay. Got to move things over. Okay, that's what we're going to do. We're going to copy paste it. That's much faster. Now, boom. There we go. Let's go ahead, come here. Now, this would suggest, and we can even go a little bit conservative there, the price action doing something like that, you know, on this way to the upside, having a little bit of trouble at this trend line that it's already had trouble at before, and then ultimately finally breaking through this $109,000 level, and then pushing up, consolidating in the $150,000 to $130,000 range, and then ultimately having a blow off top. Now, there's no way to tell what's going to happen from this point forward. But the point is, right now, with everything we're looking at the price action, with what we're seeing with price right in this zone, we have not broken anything that suggests that we should be worried about bearishness, because we're still in a bullish structure. We get worried, I would say, once we start breaking below, down in here, breaking below 62,000, which also has this horizontal, this zone right here. This is my worry zone right here. If we start to lose this level, then I get super worried. And that just means we're going to have to be a lot more patient for when markets resolve. But as it stands right now, super bullish. In fact, if we come down here to the 6 hour, notice we have pretty strong bullish divergence here on these two lows. Momentum waves, price action. We've fulfilled a 30% drop. I think essentially markets are likely chop a bit through when the FOMC meeting is. And when is the FOMC meeting? Let's see. Forex factory calendar. And we're going to go to what it's, no, it'll be next. How do I look at, here we go. Next week, Wednesday, we have FOMC meeting at 2 p.m. We get the decision, and 2:30 p.m. Eastern time, we get the actual press conference. This press conference is going to be the most important about what happens over the summer, because we're going to get the rate, which I think I'd say 85% likelihood, no rate cut. But that's not important. What's important here is that we continue to have good data, and we have the FOMC, basically the press conference with Jerome Powell, where there's actually dovishness coming in about CPI getting under control. At this point, hopefully the trade war will likely be kind of concluding or relaxing quite a bit. In addition to that, then they can also talk about, the markets have been pulling back. The inflation numbers have been coming down. Now we can talk about what we're going to be doing about what's our schedule for cutting rates. That is what we're looking for in these markets, because when we look at everything going on, we see the dollar falling. Typically, when you see, dollar falling, what do you see? Parabolic uptrend on Bitcoin. What do you see? Dollar falling, the blue lines. What do you see? Parabolic uptrend on Bitcoin. But what happened before that? If we zoom in on that, what do you see? We had dollar falling for quite some time as Bitcoin was getting its footing after a major shakeout. So it makes sense. The major shakeout this time isn't necessarily a major drop in price action. The major shakeout this time is in a new administration that's making people that aren't aware of what's going on very scared about the market, because the market's dropping. I should be selling. Oh my God, trade wars is bad. Those of us that are paying attention realize that trade wars are there to really put pressure on the markets, to trigger people to sell, so that we can be in a better stance for the Fed to actually lower interest rates. So this is a setup. And then boom, this is where we get the parabola. So when we're seeing where we're at right now, we have, kind of choppiness in the dollar, but we want to see a continuation of the falling of the dollar here. Maybe a little bit of rise, but a continuation here that can really give us the juice to really start seeing price action move up to the upside, because we're seeing it. We're seeing global liquidity. It's going to go to, there we go. We're seeing the global liquidity tick up. And this tends to be about, 50 to 100 days behind. Bitcoin tends to be behind, where even right here, flat price action on Bitcoin after the FTX collapse, large uptick first, and then we got to move up. So similarly right here, large uptick right here, and we really start to get up. So what we want to see is a break of that, a federal fund rates lowered, and Bitcoin really starting to move. But more than anything, coming over here to the total 3 altcoins, God, we are kind of in a precarious zone, because look, price action came down on the index of all alts, came right down to this previous range high right here. We did fall through the golden pocket, but we're kind of sucked up right in this. If this is able to hold the zone for alts, then we may be bottoming in alts, but there's a lot of work to do for alts to really get that focused liquidity to start coming back in. Now, when we come over here to others, it came down into the zone that we have marked out. It did overshoot it a little bit, but we're basically within the chop zone of all this previous price action. And if we start getting positivity about liquidity and markets and certainty and everything going on, then we start to see positive action in the price action. Big love to my boy Pulse Digital in the house. I see you commenting there from X. By the way, just a reminder, everybody, if you're watching on X, if you expand that video, you can live chat there. I see all your chats, but I appreciate each and every one of you. I do want to highlight a couple people because I want to start highlighting other people in the space, because we all need to have different viewpoints and listen to different people and support the community out there, right? So first off, it's not myself, just a reminder, hit that subscribe button, turn on your notifications right here. I'm doing a member stream this afternoon. Members video. If you have your notifications on, the first 3 minutes it's up, you'll get a notification if you're subscribed and you have your notifications on. After 3 minutes, I'm going to put it back to private just for members. Just an incentive for get active, subscribing, hitting that, and hitting the join button. Once you hit subscribe, yours should say join. If you're not a member, if you want to become a member, you'll get access to all those member streams. Now, shout out to Billy Goat Tails and the giversgain community. We're trying to get them up to 1,000 subscribers. It's all positivity, everything from healthy habits, leadership, crypto, trading, strategies, healing, happiness. They have a great community. I'm a part of that community with those wonderful Billy Goats. Head over to, I'm going to drop all these in the live chat here. Show some love there. Go give them a follow. Next one up, we also got our girl, not our girl, our boy, Blockchain Basement. We will be redirecting to Blockchain Basement right after this. Of course, our boy Drew here and Isaac Make sure you're giving them a subscription right there. Turn on notifications when you're subscribing to people. And then, of course, our girl, Randy Hipper, a.k.a. X, used to be Miss Teen Crypto, but she ain't no teen no more. Young woman crypto right here. Randy Hipper, make sure you give her a follow. Great content every morning. She's on around 9 a.m. or 9:30 a.m. Make sure you got your notifications on her as well. Always great content. She's doing news broadcasts, and she's on with Charles Payne and Newsmax. And, really great content. It's awesome to see young people. I mean, she started her channel when she's 17. She does a great job, putting out content on a daily basis. So make sure you're giving her a follow. Jason Casper, we got him scheduled. He's going to be on the show in April, second week of April. Make sure you give him a follow. He does great content. He's just an inspiring guy. So make sure if you do go to these channels, tell them BitLab sent you, shouted them out, spread the love. And then, of course, we also got Tom Crown, our boy here. Make sure you're giving him a follow. Always does great content, very TA driven and just, calm, cool, collected, wonderful soul. But with that being said, everybody, givers gain. Make sure you give back to somebody in your own community. Be kind to somebody for no reason. Let's help shape positivity in all spaces that we're in. If you're a part of it, you can help shape it in a positive way. That's all I got today, everybody. Make sure you hit that like button, subscribe button, ding the bell, tweet this out. That's all we got. I'm going to shoot you over to Blockchain Basement now. Let's go share some love. Tell them BitLab is sending some love. That's all we got. Adios. Did we get any super chats today? I just want to make sure I call anybody out. Oh yeah, we got $5 super chat from the mean constable. Thank you for that. Appreciate you. Big love to every single one of you and all the members. I really appreciate you. Keep your eyes out for that members video this afternoon. It's going to be a bunch of TA on altcoins. Adios. Portfolios. Is he killing our portfolios, or is he actually setting up an overwhelmingly incredible buying opportunity if you're paying attention? I'm thankful for these prices because I'm still able to stack each week at prices that I did not believe they would be at right now, while the architecture, support, capital channels, and forward-looking outlook is only getting more bullish by the day. So is he killing it, or is he creating an opportunity if you're paying attention? That's all we got, everybody. Adios. Adios, muchachos. Thank you for coming. Thank you for always tuning in. BitLab Academy.